Hello and welcome to an all-new episode of the Bitcoin News Show right here on the World Crypto Network. Thanks, guys, so much for joining us. We have a great show for you today, ladies and gentlemen. We hope you enjoy. There is a lot to talk about. Every week there's a lot to talk about in Bitcoin, but we definitely have a lot to talk about this week. So without further ado, let's get right into the quick bit section, and then we will introduce our amazing panel. So firstly, a new site, 1ml.com, has launched, which has a countdown to 1 million Lightning Network nodes. It's a great site, guys. You got to check this out because it also has a great set of stats you can check out. It keeps track of different channels and even categorizes a bunch of the Lightning Network channels. So check that out. Very cool. And of course, as always, guys, the links will be in the show notes here to both our guests and to our panelists and all of these news bits here. Secondly, a new article was released by Mr. Nik Bhatia, I believe, called The Time Value of Bitcoin. This is really cool, guys. Everybody is talking about this. A lot of people have retweeted it. Jameson Lott, Peter Todd, a bunch of people have retweeted this because it's a pretty interesting concept. And really, it kind of goes into detail about how Lightning Network could pave a path to Bitcoin becoming the world reserve currency. So check out that article. A very interesting read. And then Lightning Network has been integrated into a couple of different games recently, but it's been integrated into one of these games that I saw that came across my Twitter sphere here. It actually is there's a video I have here of a link of somebody, or a link of a video of someone purchasing a UASF hat inside an Android mobile Unity game. So really, really cool, guys. We're starting to integrate Lightning into video games. Have a look at that. Very cool. It's kind of like a little peek into the future of what we're about to see coming over these next few years. And then I wanted to make my audience aware a little bit of a new narrative that seems to be coming out because previously we had the flippening narrative, but I believe now it's evolved into the decoupling narrative, which is interesting because spoiler, this narrative probably won't work either. So they're talking about trying to the time when all the prices of the other cryptocurrencies will decouple from Bitcoin. And of course, that time will never come, just like the flippening will never come. So check out that link. Then looks like I found this next bit pretty funny, guys. It's banks are spending over $1.7 billion a year on developing blockchain products. And after 2 years, this is basically what some executives had to say. They said, half of the executives told us that implementing DLT, distributed ledger technology, was a little bit harder than they originally expected. So surprise, surprise there, guys. Check that link out. Very, very interesting. That was by Mr. Joseph Young, our amazing journalist over there on Twitter, who likes to report on all of the Asian cryptocurrency news. So very, very cool. Thank you for that, Joseph. You guys got to follow Joseph if you haven't yet. Joseph Young, amazing journalist. And then I want everybody also be aware that you guys got to be careful about these altcoins because we have in the news here EOS locking like 20 accounts, and then Zcash community paying off devs in order to avoid a chain split. So we got the links in there too, guys. You got to watch out. These altcoins are not very stable. They always claim to be a better Bitcoin, and they always claim to have better governance and more secure and all this stuff. Yet here we find these crazy, crazy stories continuing to come out. And finally, guys, I will be speaking at the Bitcoin Rodeo conference over there in Canada, Calgary, Canada, on July 8th. I really hope that everybody can come out there and say hello, shake our hand. Actually, Francis, of course, will also be there. He's on the panel today. Well, we'll be out there in Canada, and we have a lot to talk about. It should be a great time, guys. I believe it's 2 days long, July 8th and 9th, and I hope everybody can come out. The tickets are still pretty cheap, so it should be a great time. A lot of Bitcoin legends there are going to be there. I think Safety is going to be there as well. Of course, the author of the Bitcoin Standard. So lots of great talking will go down there. So if you guys can't join us there, I'm sure you'll find us everywhere else. We're trying to be in as many of these Bitcoin conferences as possible. So thanks, guys, for joining. Without further ado, let's go ahead and introduce our amazing panelists. First, we have Mr. John Carvello himself. John, how you doing?
I'm doing great. How are you?
Awesome, man. Thanks for joining us again. We love John. We always lovingly call him, of course, Mr. John Bcash Carvello. We love John. We got Francis joining us as well. He's on the podcast all the time. Francis, how you doing?
I'm doing great. It's really great to be back. So, I mean, I think our viewers know that I've taken maybe 5-6 weeks out of the podcast, but I'm back now. And I got a lot of things to say again this time. So it's going to be a good episode.
As always, Francis, you bet, man. We hope you enjoyed your vacation. We heard you were out there by the beach and everything like that. So we hope you enjoyed your vacation while all of us are here worrying about the Bitcoin price. And then without further ado, we have our special guest today, ladies and gentlemen, joining us, Mr. Andrew Kiguel from Hut 8 Mining. Andrew, how you doing today?
I'm good. Thank you very much. Thanks for having me on.
Thanks so much for joining us, man. We heard a lot about you. We heard a lot about Hut 8 Mining, so we want to get right into it and ask you a couple questions. I know I have a couple questions, and I'm sure the rest of the panels has a couple questions. But before we do that, let me just have you maybe introduce yourself a little bit. Introduce how you came to the company and how the company came to be, and what it's really known for.
Sure. So I don't really come from a traditional blockchain background, but I was an investment banker for a firm here in Toronto called GMP Securities. And I was part of the blockchain team there. And while there, myself and my peers there, we raised close to $1 billion of equity for different blockchain companies. And it was one evening having drinks with some clients where we said, wouldn't it be great if there was an ability for, I would say, the less sophisticated people to get access to Bitcoin? So it's a way that you could just call up your broker, put an order in, and then you get it as part of your monthly account. And we thought the best way to do that would be by creating a Bitcoin mining company, which is what we did. And we created Hut 8 from that. I'd say we immediately after coming up with the idea, we went out and visited the guys over at Bitfury and convinced them to come in as our exclusive partner. And that was really the genesis of Hut 8.
Very, very cool. So you actually didn't come from a blockchain background, but you, of course, I'm sure, got sucked into the black hole like the rest of us once you first heard about Bitcoin, right?
Well, yeah, I mean, it was, when I first heard about it, I was an investment banker. I remember going to the CEO of the firm and saying, we have to get into this space. So there's a lot of opportunity here for us to, and this is something that's going to change the world. So we want to be involved.
Very, very cool. So let me ask you real quick. Do you, what is your thought, or what is your view or opinion on decentralization in mining when it comes to Bitcoin? Do you think that is true what Andreas says, so that we kind of we went over the hump of peak centralization and are now starting to kind of go down the other side to a more decentralized environment? What are your thoughts on that?
Well, I mean, I can tell you from a mining standpoint, I look at the network hash rate and it's at about 40,000 petahash, and it's and new miners popping up all the time. So I do see that it's getting more decentralized versus, I think there was, a lot of mining that was happening in places like China. So from that perspective, it is. But the other shift that I see happening is it's becoming much more industrial. It's no longer something that, the hobbyist can do out of his basement. Like, you need the ability to buy equipment en masse to get those discounts. You need the ability to go in and negotiate large power contracts. I think that's the only way that it's going to remain competitive. So, in one sense, it is becoming less centralized, but in the other sense, it's becoming more corporate.
Very interesting. Yeah, that's kind of what we're seeing, and that's what Francis tells us too. That it's just becoming crazy more industrial when people almost can't even get access to enough power, because that's how much demand there is for Bitcoin mining up there in Quebec. So one final question for me, and then we'll go to the rest of the panelists and see if they have any questions for you. But I was just wondering, because there is a bit of some controversy in the news when it comes to Bitfury and their Crystal software. And so I was wondering maybe what your opinion was on their blockchain analysis software, and if you find this to be a bit invasive when and a bit of loss of privacy on the Bitcoin blockchain, and what are your views on the privacy of the Bitcoin blockchain?
Yeah, I mean, the Bitfury guys are partners, so I'm less involved in that part of the software business. We obviously buy all of our hardware from them, and we have the exclusive partnership with them. So I can tell you, we've just installed another 16 block boxes in in Medicine Hat, Alberta, and they're performing extremely well, like over 9 petahash a second per box. So from that standpoint, the hardware has been virtually flawless, but not really in a position to comment on their software.
Yeah, no problem. Yeah, we definitely, Bitfury definitely has a great track record when it comes to their hardware. I mean, they do continue to push out huge amounts of hardware, and it continues to be more and more successful. So yeah, I just wanted to see what you thought on that, because my personal view is that it is a loss of privacy for the general public. And yeah, sorry, did you want to say something, Andrew?
No, I was my only point was, was back to thinking what you were saying. So the block box technology, and I don't know if the viewers are familiar with that, but it's a 40-foot marine container that's been converted into a data center. It's got over 100,000 chips in it, and it's basically plug and play. So That's the technology that we employ to sort of have a turnkey solution with loss of privacy.
Okay, cool. Yeah, we lost you in the last bit there. Maybe you could just go. We lost the last 10 seconds.
I said, yeah, but I hear what you're saying on the other stuff, and certainly there is an argument to me there for a loss of privacy. So I understand where that's coming from.
Yep, very cool. Okay, let's go with John next. John, do you have any questions for Hut 8 mining before we go into the other topics?
Sure, I have a couple. One is, you mentioned that mining is getting more industrial and you're having to have more corporate kind of connections and power to be able to negotiate contracts and things like this for energy. I recently saw an article coming out of Quebec about how they're raising costs temporarily for for power for miners while they figure out what to do about the situation of how popular it is. Do you think that this is like a risk in Canada or other places where you're going to invest a lot of money in technology and infrastructure there, and now you're going to have this kind of weak point where now power companies can kind of lean on you to, take your profits?
Yeah, so Quebec is a unique, every province in Canada has their own government and makes their own policy. Quebec has been a tricky one. A lot of people want to get into Quebec because you can get the hydropower, so clean, renewable, and cheap. But it's a very bureaucratic province. And so I don't think from our standpoint that we were surprised by what we're seeing. We've had lots of communication with the Quebec Hydro and the government there. So we've always seen that this is going to take a long time. Ultimately, with the way they're approaching this, I don't know if we're ever going to make it into Quebec. But then I look at a place like Alberta. Alberta's got a ton of trapped energy. Like it's got like the first or second largest reserve of gas in the world. There's wind energy there. And, in the place where we negotiated an agreement, we did a 10-year agreement for 42 megawatts in Medicine Hat. So Medicine Hat, it's its own grid. They control their own electricity. And about a few years ago on spec, they built two 42 megawatt turbines. So this was really, they were built in order to attract business and jobs to the city. Vastly different than Quebec, which really people are just trying to go in there and tap into the same grid that everybody else is buying from. So again, in Medicine Hat, these were built to attract business, and we signed 10-year deal where the price is generally fixed. And so we feel pretty comfortable that there's not a lot of leeway there in terms of them coming back and trying to renegotiate.
I have two more questions. The next one is, you mentioned that this big storage container or such that has all these chips in it, that it's kind of a plug and play thing. Do you think that miners are the type of business that is going to appeal most to Canada to distribute this energy to? Does it actually bring a lot of jobs if things are plug and play? And does it bring any kind of negative sides to the communities that they pop up in?
Yeah, so I'll answer the jobs question. It does not create a lot of jobs. We find we're creating about 1 job per megawatt that we have. We will be just under 70 megawatts by the end of the summer. So it's not a ton of jobs. In terms of the community, the boxes are quiet. They're generally placed on the periphery of a city right next to where the power generation is done. I can flip you guys a picture at some point, but they're not like, eyesores to look at. There's no noise that comes off them. They do take up a lot of room. So for us in Medicine Hat to put up, call it about 48 megawatts, we need about 11 acres.
And then my last question is sort of related to stuff like Crystal. Do you consider miners to be transaction processors, and do you kind of prepare for the possibility that government may consider you this? And would you feel yourself to have to be in a position one day where if Crystal was marking transactions as risky or such, that you would not include them in blocks or somehow censor or passively censor them or require, some kind of registrations or whatever it might lead to?
I hope not, because I feel like that takes away from what the whole ethos of Bitcoin is, which is this freedom that's away from the ability for government to come in and control. I think certainly everybody's concerned about money laundering or money used for fraudulent things. But it's very interesting, in Canada, and I think this is something that's being shared similarly by not just miners, but blockchain companies. Canada is an oligopoly with respect to the banking system. There's 5-6 large banks that control 95% of the banking. They're kicking out every single blockchain company that they bank with. So we currently bank with the largest bank in Canada, which is like the 8th or 9th largest bank in the world, and they've already told us they're going to kick us out. And when we ask why, they say, well, we don't know which transactions you're ultimately validating, and neither do you. You might be validating, people buying arms or terrorism, money laundering, all types of things. And so it certainly is something that's going to have to evolve and get regulated, because ultimately, as much as we like to be outside the banking system, we still need a bank to pay our bills, right?
I disagree that it's something that has to be regulated. I also disagree technically that it can be considered that you're validating a transaction, because all you're doing is proof of work. And
I agree, but the bank doesn't see it that way. The bank always comes back to us and says, you're doing the proof of work, but ultimately something in there that you might end up validating in the blockchain that's going to come back to us, and maybe the bank gets sued. That's their fear. And trust me, I've had these conversations with them, and it's not just for the miners, it's anything related to cryptocurrency or blockchain.
But you actually think it's inevitable that they will regulate this type of behavior?
I think it's inevitable that there will be some type of control that's going to try and be exercised on it, but I hope it doesn't work. Like, ultimately, I don't know how you could do it, because again, as a miner, we don't see the actual transactions that are happening or what they're for, right? And so in order for that to happen, I mean, I just don't know that the technology is built that way. But certainly I can say from the banking system that they're going to continue to try and see how much control they can exercise in space.
I would say they might be able to do it with the larger the miner that you are, but the effect is going to be good for Bitcoin in the end, because it will force mining companies to be smaller, because they can attack the 3 biggest companies in Canada, but they can't go after 3,000 people mining Bitcoin or something. There's an amount of decentralization that will be hard to stop. They can't stop Bitcoin mining, right? So if they try to stop your Bitcoin mining, it's only really going to damage their own ecosystem, their own economy.
Yeah, and I mean, and again, hopefully by that time, as I see what's happening in the market space, I feel like the smaller miners are all being pushed out. On a weekly basis, you'd be amazed how many calls I get from smaller miners, guys with 1 to 2 megawatts or less, that are calling us up, and they're just getting killed in this environment. They can't survive. My view is in the next 12 months, you're not going to have a whole bunch of small miners out there. I think that this goes back to the original question, which was the decentralization of this. I could picture in 2 years there being sort of 10 miners that control 60-70% of Bitcoin mining.
Yeah, I could see how maybe geographically we'll get more decentralized in the coming years, but I think you're right that maybe the companies still might continue to just grow in size individually.
Well, there was a Morgan Stanley report published last week, and we've done our research and view it as being somewhat accurate, that says the average cost for an industrial miner is about $8,000 US per Bitcoin. So you compare that to where it's been trading over the last few months. People aren't making money at this stage. So, that whole incentive, that reward that's supposed to be there for the miners isn't there. And because these guys are losing money, they're all just mining and selling because they have to pay their electricity costs and all the other costs that they have in fiat. And so, again, when I look to the future and see what's happening here, either the amount of mining and then the network petahash rate has got to come down, or the price has to go up. But right now we're in a weird equilibrium here where at this price, at this difficulty, most miners will not survive. That's at the industrial scale.
Sure.
It's time to move to Venezuela.
Yeah, and it's interesting to watch, because this stuff is going to all pendulum, right? So, we can make projections, of course, based on current data, but of course we know, stuff is going to change, right? Price goes up, price goes down, the hash rate goes up. So it's very interesting to see. But let me just, building on that question, just my last question will be, what about commoditization, Andrew? Like, do you see that happening? I suppose that's not going to happen soon. We know that, right? That's going to take like probably a decade. But I mean, do you see that after, or eventually happening after we have a little bit more of this concentration of industrial miners? Because I know that the environment that it is now, where we have this huge hash rate with little price, is not going to stay. It's going to eventually support little miners again.
So I would say that I don't know that it will support little miners again. I don't know. What I see happening, and what I've seen happening over the course of the last 12 months and accelerating rapidly, I think that the opportunity for small miners is gone. you see the state of the new chips coming out, that everyone's talking about the 7 nanometers. Once that gets commercialized, like the price point on those, I think is going to be so high that it's going to be out of reach for most small miners. I don't know, unless there's some kind of a new leap in technology that occurs that allows people to get in a cheaper price and actually have, a petahash rate there that's competitive at a low price. I just see that as anybody who's trying to get into the space now as a small miner or a hobbyist, it's not going to work economically for you.
Yep, and because it's funny, what you basically mentioned is unless there's a black swan event, right? And you never know in Bitcoin. There's always some kind of black swan event happening, waiting in the wake. So it's going to be very interesting to see, because we've had both black swan events in software and hardware when it comes to Bitcoin. So you just can, it's really hard to predict that kind of stuff. So good points, Andrew. I believe that Mr. Francis has a couple of questions as well. So go ahead, Francis.
Yeah, I mean, John, you had a lot of really good questions. So you asked a lot of questions that I wanted to ask. I have a few questions for you, Andrew. But first, maybe I would like to make a little comment on the kind of miners as transaction processors and compliance regulations banking around that. So interestingly enough, the AML KYC regs for money service businesses have been released, the first draft by FinTrack. And according to our interpretations, it's going to get narrower, the definition, but according to our interpretations, there's no, miners are not money transmitters or money processors or MSBs, or they won't be in Canada. However, as we know, the financial institutions, they have varying source of worries. So for example, before the regulations came out, the financial institutions would tell Canadian Bitcoin companies and blockchain companies, it's all about regulatory uncertainty. Now that the regs have come out, now it's about appetite for risk. So there's multiple reasons that they'll have to for example, avoid banking Bitcoin companies. However, I would not expect at all there to be any burden on miners in Canada to censor, to filter transactions. Definitely not in the landscape. Perhaps banks, the way that I could see it happening, for example, is banks making a consortium saying, we'll bank Bitcoin companies if you subscribe to these sets of standards. That's something that I could see happening. Regarding decentralization, I mean, one thing that I've been thinking about recently is that the way that I see it as hardware, as you see like the hardware leaps become smaller and smaller, the 7 nanometer, of course, is going to be extremely expensive to own, which is also a reason for me. I'm not sure it's going to go to 7 nanometer like right away because it's so expensive. But the way that I see it, the advantage you have with the hardware is diminishing over time, and the advantage of electricity cheapness, the cheapness of the electricity rates gets higher over time, right? So that's why, the way that I see it is the decentralization of Bitcoin is going to depend mostly on the barrier to entry to cheap rates, to cheap electricity rates. We had the first phase where it was the barrier to entry was the foundry, was the China-specific environment where it was really high barrier to entry to compete with Bitmain. Now it's going to be on the rates, which makes the discussion that we're having about the barriers to entry to the two rates really important. So my first question for you, Andrew, is I'm a huge fan of the mobile mine concept. And one of the reasons I'm a huge fan of that, it is because electricity and energy is not liquid, right? It's hard to transport over distance. And you're talking about something really interesting, which is a closed electricity grid, which will produce, surplus, right? So in Alberta, we're seeing a lot of petroleum stations, a lot of oil fields that are producing methane, like natural gas, and that are forced to flare it. So my theory, and a lot of the theory of a few Bitcoiners in Alberta, was that eventually the mobile mines are just going to go around on the oil fields and tap into that accumulated methane, which is going to be, fired up, flared up, and that would power some mines. So do you see the mobile mine as a solution, like moving the mine around and allowing producers on closed grids to outflow their, to sell or dump their surplus? Is that something that Hut 8's strategy in Hut 8's strategy, or is that something that you've seen in Alberta?
Yeah, so I think we would be the first to do that, but our goal was always to be energy hunters instead of energy takers. And so we are having conversations with other parties in Alberta, and I currently have line of sight in another 300 to 400 megawatts of power. Some of the challenges are, you're right, we've gone and met with a lot of the CEOs to a lot of these oil and gas companies, and when we went and talked to them, they were salivating at the thought of having to actually the ability to sell some of this energy to us, because really it's just trapped energy, like they're flaring it or it's just sitting there. I think some of the challenges is depends on where these sites are located. So, having to move our block boxes there. I think number 2, is there sufficient people around to help build the sites? Because although it's 1 megawatt per person in employment, to get the site set up takes a while. And then it's just the transmission costs. So you got to set up transformers, you got to clear and grub the ground. Is there enough land? Those are the types of things we're looking at. But yeah, absolutely. We always plan on being energy hunters.
Yeah, no, that's really awesome. And regarding so that's a great answer. So regarding, for example, your take on Quebec, for example, so the announcement that you made in Alberta, do you expect, because as companies looking at investment in a jurisdiction, you're looking at, from an investor's perspective, you're looking at the price of the electricity, the energy, the infrastructure, but the reliance and the reliability of government policy. How much of that was a factor in deciding, Alberta versus Quebec? And, if you look at the competitive advantage of Quebec versus other jurisdictions like China, like Russia, like South America for mining, when you look at the stability of the jurisdiction and the policy process, how do you conceive Quebec? Do you think that they ruin their competitive advantage? Do you think there is anything that Quebec can do to kind of take that competitive advantage back? And do you think other companies will follow in your footsteps and set up shop where the regulatory and policy framework is more stable and more reliable?
Yeah, I mean, it has to do a little bit, for the listeners with respect to Canada. Alberta has always been a massive energy producer. They've got, some people say as much oil and gas buried in the ground there as Saudi Arabia. Like it's massive. It's just a function of getting it out. So it's always been an entrepreneurial province. They've always been a province that are out there trying to sell their energy. Quebec is a different story. Quebec has always been a little bit more bureaucratic societies, a little bit more left-leaning. And so when they start looking at this stuff and they start running it through the bureaucracy, yeah, I do think they've lost a little bit of the competitive advantage here. But ultimately, I don't think they care, because they don't. My sense is they don't have the same entrepreneurial spirit that Alberta has, that has already been doing. Like the entire livelihood of Alberta has always been off selling energy, and so this is something they're comfortable doing. With respect to other places, we often have these conversations with Bitfury. We could probably go down to less stable political environments like Venezuela if we wanted to and get very cheap energy, but we're not going to do that. I think being in a place like Canada where there's political stability, and specifically in a place like Alberta where that entrepreneurial spirit to work with cryptocurrency companies, it's ideal.
Yeah. So my last question is regarding the ROI and forecasting, and just the general performance of miners right now. So, we're in a pretty historically unique situation right now where the hash rate had been climbing following the incredible price rise of Bitcoin to 20K. But contrary to the hypothesis of Bitcoin, the hash rate didn't reduce and follow the price. So we had this deviation from one of the hypotheses that a lot of the businesses in the space were relying on. So when we were doing our forecasting, a lot of the Bitcoin mining companies were relying on the idea that the hash rate and the price would historically follow the equilibrium. So, can you tell us right now, how is the situation, right? So with the hash rate increasing, the price dropping, how are big industrial miners faring? And, because from the outsider's point of view, it looks like miners are having a really, really bad time. So I don't know if you can tell us a little bit about how you guys are doing, how other big miners are doing. Are miners struggling? And what's the future, the short-term, medium-term future looking out like for you guys?
Yeah, so I have a lot of responses to that. So we did a regression analysis to look at the network hash rate versus the price of Bitcoin, and it's probably a few weeks old. But what we saw was that the correlation was about a 0.5. So at the current network hash rate, that would imply a Bitcoin price of $20,000. What's happened here is when Bitcoin actually hit 20,000 back in sort of that December timeframe, and the entire world was going crazy, and basically everyone out and bought equipment, because at the time the network hash rate was at about 8,000 petahash. So the profit margin at that point was so huge. Everybody bought these machines, and then the price started to collapse to where it is now. And when I saw it this morning, it was below 6,000. These are the miners that are now calling us up on a weekly basis and saying, can you please come save us? Can you come buy us? These are people that didn't end up getting, the same type of power contracts that we have. They bought their equipment at the peak from places like Bitmain and whoever else. So they paid a high price. The margins are getting squeezed. They can't make any money. And what they have to do is they have to sell every time that they mine. Like, you still have to pay your electricity costs in fiat for most companies. The advantage that we have is because we deal through Bitfury, we can pay off all of our maintenance costs to them in Bitcoin. And because we were able to raise a lot of capital back in December and in February of this year, we have not sold a single Bitcoin. So, we'll either be proven to look really brilliant in the future or really stupid, but so far we've mined over 1,600 Bitcoin. I'm trying to hoard as much of that as I can because I am a Bitcoin believer, and I'm hoping that the price comes up and that the equilibrium between the network hash rate and the price goes back to something that's reasonable. But I can tell you today is the guys that I would call the hobbyists, the smaller miners, they're getting their asses handed to them right now. They're losing money. There's no question. Their cost per Bitcoin has got to be in the $12,000 range. So I think as they mine, they sell. I think for the industrial groups, people like us, if you include the cost of the equipment amortized aggressively, they're probably in the $7,000, $8,000 range. I can tell you for us, we released our first quarter about 3 weeks ago. If you exclude the price of the equipment, our price per Bitcoin was about $2,000 US. So we do have some good margin here, I think, based on what we're doing, and some of that's exchange rate. But I still think that there's not a lot of people that can compete with us on price.
Yeah, that's a great answer. And just a final bonus question. Sorry, Vortex, for so many questions. As a hasher, as a miner, and that bringing back also to when we were saying like the miner doesn't necessarily validate that much the blockchain, because if you think about it, the pool is outsourcing the math to you, and you're like a hasher, that's contributing to the pool, and the pool is the one that's connected to the network. But mining.
You got to try explaining that to the guy that runs a bank branch. We're not actually trying to explain. We don't actually do the KYC or the AML and any of that stuff. He's like, well, what do you mean? I thought you're about this is.
I can explain it easily. It's just like, if a power company provides power to a criminal, are they criminal?
Yeah. Right.
That's a good analogy. Yeah.
Yeah. But regarding the choice of mining Bitcoin versus Bitcoin Cash or Bcash, right? Yeah. So as a hasher, when you're making those decisions on what sides to follow, is it a purely economical decision? Is it a purely profit based analysis? Or is there more going on? Are there other considerations when deciding to support one chain or another? From your point of view, as a very corporate, business-oriented miner, do you have other considerations than economics when choosing Bitcoin Cash or Bitcoin, or picking a side?
So we only mine Bitcoin. Okay, and that just goes back to the genesis of the company. Is we wanted to provide people we're a public company, we trade in Toronto and in the US. We wanted to provide them easy exposure to buying Bitcoin, where they didn't have to take that leap of faith that I had to take a couple of years ago, where you're taking a picture of your passport and wiring money to Gibraltar or wherever else. It's a big leap of faith and a lot of steps for people that they don't want to take. So I like mining Bitcoin. And now I understand the economics are better. Like at the beginning of the year, everybody was, Bitcoin Cash, and sometimes it's Monero. I don't want to be a coin chaser, because I feel like the economics are change all the time. And the one thing that I sort of hang my hat on is the correlation between Bitcoin and every other coin is so high, but the extra effort for us to go and try and chase down whatever that coin of the month is, it's exponential. So I don't want to get into the game and sort of trying to predict what's going to be hot, because there is a transition period if you're going to move from one thing to the other. I like Bitcoin. Bitfury, our partner, are experts at Bitcoin, and I'd rather stick to what we're good at than try and venture into something to try and make a little bit more money here and there.
Great answer. Thanks, Andrew. That's good. That's it for me.
Absolutely. Yeah, great questions, guys. My favorite part, I guess, was seeing how you have 1,500 Bitcoins, Andrew, and you plan to hodl those Bitcoins. That is.
Yes. As long as I can. But, at some point we have bills to pay as well. And so we do have to sell. But again, the relationship right now is it's a little bit wacky, as everybody's identified. Like, the network hash rate's at 40,000 petahash and your price is below 6,000. That's not something that's sustainable in the near term or the midterm.
Yep, agreed. And I believe that as Bitcoin always does, I believe that eventually, and I think you guys are betting on this too, that eventually it always does return to an equilibrium over time as the market settles.
So I have a question for you guys. I mean, if I can return it back, there's been a lot of talk about price suppression, price manipulation in the price of Bitcoin. Like, how do you guys feel about that? Do you feel that this lack of equilibrium right now, or where we're at, which seems we're moving further and further away from that correlation, that regression and analysis between the two? What do you think is going on here?
So I'll go first, and I'll let the other panelists answer. But my answer to this is that there's always going to be market makers. And that's just kind of how we build markets. And so I think what people mostly see as manipulation is just market makers doing their thing. I don't believe that there is a consortium of like a bunch of traders that are all just trying to short together or anything like that. I believe that they are individuals and are making decisions based on individual actual what's the word I'm looking for? Individual incentives, because everybody's got their own thing. Some people believe in it, some people don't, right? So some people are going to short and some people are going to long. And I just think that the market is just too decentralized. There's just too many exchanges for some kind of, actual collaboration. And if you look at the actual volume coming out of the CBOE and the CME, you'll see that it's hardly anything. There's just really hardly anything there to justify some kind of actual manipulation, in my personal view. And again, when it comes to the price, everybody, there's a lot of people, including Tone Vase and stuff, that after 7,000, there's no way that you could predict where it was going to go. It went from 7,000 to 20,000 in 2 weeks. Like, nobody had any idea. So that was just a clear FOMO. I don't think it was manipulation or anything like that. I think that was just FOMO. And those same people sold just as hard as they bought, because they bought without knowing what they bought, and they're selling without knowing what they have. So, but that's my personal opinion. I'll let John go next. Go ahead, John. Oh, you're muted. But we can go with Francis too if you want to get that set up. But yeah, you're still muted, John. Francis, go ahead.
Yeah, sure. So the first part of the question, I think, Andrew, is partly the correlation between hash rate and price, right? Not just the price in general, but really that correlation. And I think the part of the equation which is imbalanced, I think might be on the hash rate and not on the price, in the sense that my feeling is that the bull run and the hype and the investments that led up to and including in the 20,000, I think there was a lot of investment in mining. I think there was a lot of machines produced. I think there was a lot of speculation in the market that the price was going to follow the hash rate, right? That the price was going to actually follow. I think people invested in mining, speculating on the price following as one of the measures. And when you invest in mining, speculating on a price increase, you're still stuck with the hash rate at the end of the day, and you might as well plug it in. Whereas if you're speculating just on the Bitcoin price, you're stuck with nothing. So that price will drop as the value of it drops. And regarding so that's the first part. So if there's an imbalance, I think it's on the hash rate side right now, in the sense that, to me, the price looks fairly natural if you compare it to the history of Bitcoin. So you have these massive interest spikes, and this kind of double bottom, and this kind of little bear market, and then this re-equilibrium. So I don't know what you feel, but I see the imbalance.
But doesn't it make you a little bit nervous that you see like the price has been below $10,000? I think it almost clicked to 10,000 about a month ago. But that the hash rate continues to increase, even though we haven't seen anything. We haven't seen anything that shows the momentum of it going over $10,000. In fact, the momentum seems to be going the other way. So I wonder if there's a whole bunch of people selling off their machines cheap and just getting a whole new wave of people in here that have purchased cheap machines and are just trying to get in here, and that the hash rate will keep going up, and it might be a while before we see the price come back into balance, or the hash rate come down.
Yeah, absolutely. And we also don't really know, people might value creating the Bitcoin themselves more than buying it with a premium that we're very much underestimating, right? So, for example, we don't know if there's a particular miner that is really okay with mining at a 40% loss. We don't know that. And we don't know if this miner is willing to buy all the hardware from the people dumping and keep running it. So there's all these things that we don't know. But in the long run, I don't think that market can stay it is kind of irrational right now. And as you say, for sure, people are losing money. but we don't know if they're actually losing money because we don't know what the opportunity cost of them not mining is, right? So it's those hidden, opportunity costs that are out there. And just regarding the price manipulation, the thing is, like, you can't inflate the amount of Bitcoin. So it is much harder than for example, other currencies to manipulate the price of Bitcoin. Certainly, a lot of people can have, huge positions in the market and play with that. But, I'm not sure how easy it is to actually manipulate the price of Bitcoin that effectively. A lot of the theories have to do with, the printing of UA IOUs like Tether, or people playing on the futures market, which don't have that much liquidity. I think the futures market right now. So I don't know about you. Andrew, you come from a finance background. I mean, it looks to me like it's quite hard for institutions to manipulate Bitcoin, specifically without getting caught. What do you think about the price manipulation? Do you think it's something that may be going on right now, or?
I would say it's hard to say, but I think that the larger thing for me is it's less of a fact of whether it's going on or not, but it's the optics, it's the perception out in the marketplace that's going on. So, oftentimes when I go and I meet with people in the financial district and in financial services business, they immediately come to this conclusion: oh, Bitcoin is under manipulation. It's just because you get one article like the one that came out a couple of weeks ago, and even though the volume on that Tether exchange was tiny, people don't put it into the proper context, and it explodes into Bitcoin is just a giant piece of manipulation. And so for me, it's more about the optics, and I'm one of the people that wants to legitimize Bitcoin. I believe in its future. I believe in what it can do, and so articles like that, and it's the perception of manipulation, I think, are more dangerous than if there is small amounts of manipulation going on.
But I think that perception, of course, is just short term, right? Because I mean, the price is going to go up eventually. We understand the fundamentals of Bitcoin right now, right? We have SegWit activated, Lightning Network going. The security and the technicals are stronger than ever. Sorry, the security and the fundamentals are stronger than ever. It's really only just kind of waiting out a bear market now at this point, because even in a bear market, good news will still drive it down. You can't stop that. And because we have this difficulty adjustment, the difficulty will adjust. If the price continues to go down and miners leave. So we know that the price will go up eventually. So it's just a matter of time of when the hash power is going to meet the equilibrium of the price. And personally, I think that the price is going to go up far sooner than we have some kind of huge drop off on the actual hash rate, because people, even the miners, a lot of them are holding a lot of coin, and a lot of them know that the price has to go up eventually to support the economics of the past 10 years. But go ahead, Andrew.
John. Yeah. I think the optics all come from bias. I think the bias happens when people come into Bitcoin looking for a certain reason. They're basically, most people are investors, and most people that first get into Bitcoin are either traders or become traders very quickly because the volatility has this effect on their psyche. So every time they see the price move, they need a story, and they're always going to pick the story that suits their bias. So when a banker tells you, oh, the market's being manipulated, it's because he's scared of Bitcoin. He's not interested. He wants an excuse to not enter into the Bitcoin market. If he was excited, he would say, I'm not too worried about the bias. I'm not worried about the volatility. He would be looking for a solution. And traders do the same thing. So you guys talked about the mining hash rate not really jiving with the price. Well, the mining, they're obviously detached, because the mining hash rate has always gone up ever since ASICs came out. There's been one difficulty period where it went down or something like this. This is a constant, and there's some reason for this. It might be because people want clean Bitcoins, and it's probably more to do with the fact that if you acquire Bitcoin through a business, now you have certain deductible expenses, and so there are certain advantages to obtaining Bitcoin this way. But I don't think that it's something that you're going to be able to directly correlate with the price. I think at times it reaches equilibrium, and it will always be magnetized towards the proper price equilibrium, but they're not totally correlated at all.
No, it's tended to be about a 0.5 correlation the last few years, but you're right, they can move differently. But if you were to think about people acting in an economically rational fashion, and as the mining becomes more industrial, that people are going to think that way. At the current price versus where the hash rate is, I would say probably 95% of miners at today's price are not not creating or not doing it at a profit, like there's zero to negative margin
But
there.
what is your actual confidence level in assessing what all the miners in all the parts of the world are actually profiting off of Bitcoin? Like, I know that we have some data on it, but what is your confidence in that data and how whole and complete it is? I mean, when I see that Venezuela can mine a Bitcoin for $500, I have to believe that that can really skew a lot of the data. You know, if you don't know a lot about who's mining there, and you don't know how much, whether they're holding or selling, it could be that Venezuela is the one depressing the price because they're mining more Bitcoin than we think, and they're making a big profit off of it. I don't know.
Yeah, so I think it depends on whether or not, but the way I would make my assessment is this, is I know from doing research and through our partners and talking, I speak to the other CEOs of the other cryptocurrency miners that are out there. I have a pretty good sense of what the electricity price is that most people are getting around the world. And if you can do 4 cents per kilowatt hour or less, you're in pretty good shape. Most of the hobbyists are in the 25-cent range, or 15 to 25 cent. We're in the 3-cent range US. So I can work backwards a little bit because I also know what the cost of the equipment is. So whether you're buying it from Bitfury or Bitmain, I can ascertain there what that price is and work backwards to see what, if you include the price of the equipment, what the average price would be. So yeah, if electricity is your biggest cost.
About all of the equipment out there, you're confident that every single foundry that's making every type of machine?
Of course not, but I know that everybody tries to remain somewhat competitive. I know, like, for example, the Ant miner from Bitmain's come down about 60-70% in the last 12 months in terms of price, just in line with the thing. So I'm not claiming to know, but it's part of my job to go out there and gather information and do that, and I read a lot of reports. So again, we can agree to disagree on that, but my perspective is in sort of as a person that looks at this stuff for 8 hours every day, my view is that most of the industrial guys in the world, so guys who are mining 10 to 15 megawatts or more of power, their average price is in the $7,000 to $7,500 plus US per coin.
Okay, let me ask you this then, because you already gave us an example. You said you've mined and holding a decent amount of Bitcoin, right? Now that means you're getting what, $0 for your mining, and yet you can afford it. So how are you doing it?
Well, I believe Andrew said he had an investment, but go ahead, Andrew.
Yeah, so we raised $108 million. And in raising that capital, the view was always to hoard as much of the Bitcoin as we could. And so we raised sufficient amounts we raised sufficient amount of capital in order to cover our working capital go forward. Now that will change because the capital markets are now somewhat closed, and we will have to dig into our inventory, but we haven't had to yet.
Yeah, so doesn't that partly answer our mystery question here? Because the money, essentially, you're inflating the market price when you hold the Bitcoin. You're basically you've been buying Bitcoin this whole time.
Well, right? I don't think holding 1,600 Bitcoin has necessarily raised the price, but I know from talking to the other CEOs, when I talk to sort of some of my peers who are mining, industrial size at different parts, we're the only guys out there that I am aware of that are actually in a position to hold what they're mining. Everybody else is mining and selling as quickly as possible because they're just struggling to pay their bills.
I just have one other comment. It's probably more significant than people realize. If you do analysis on the blockchain, I think it was about 6 months ago, someone was showing a report that only 3 million Bitcoins have even moved in the last year. This was a year 6 months ago. So the amount of actual liquid Bitcoin out there is a pretty small pool. So 1,500 I know is not a high percentage, but if there's a few people doing a few thousand Bitcoins here and there, and it can have an impact on the actual amount of Bitcoins that are or aren't in the market.
Yeah, well, like I said, if I wish holding our Bitcoin, I mean, theoretically, yes, holding our Bitcoin should help create more scarcity and drive the price up. Clearly, that has not been working.
Yeah.
Not yet, anyway, but we'll
not
see.
Yet. Not yet. We'll continue to hold them as long as we can, yes.
All right, cool. Francis, do you have any finally? Okay.
Yeah, just a last comment, because one of the themes that we're talking about is how it's impossible to have the information, because one isolated player somewhere can have a huge effect on the market. And I think that was one of the things that, John, you were driving at. Like if if 10 or 15 mines are holding each $1,000 Bitcoins, it might not look like a lot, but it's making a huge effect. But in terms of price suppression, one of the rumors that I've been hearing is that there's an Asian gentleman that is that's been trying to sell hundreds and hundreds of thousands, if not close to 1 million Bitcoins over the past few months. So there's always these kind of rumors that are coming on and off. And I've heard credible sources saying there's a huge whale that's been dumping Bitcoin for months. So while we're here trying to figure out why the whole market isn't really working out and why your theories about the equilibrium are playing out, we forget that Bitcoin's still super small and there's like these huge whales out there. So I mean, we really the timeline we're looking at is just so short. Also, to do this study, when you think about it, imagine the difficulty of adding 10% to the hash rate on the network. Imagine just the human logistical labor involved in adding 10% of the hash rate versus this can happen in one day on the markets, right? So it is impossible for the mining market to adjust at the same speed because you're talking about a whole supply chain of tens of thousands of individuals and boats and trucks and transport and logistics. Same thing with hash rate. Imagine unplugging 10% of the hash rate in one moment. Imagine how difficult that would be for all the mines. So this lag that we're having between the market, the financial markets and the mining market, I think this was kind of like the hole in the equilibrium theory is just how long is this lag, right? Where we look at the long enough time. So when you're doing, and this is why also you're saying like the corporate miners are the ones that can ultimately survive, is that you can afford, for example, to possibly have a 9-month downtime on a 5-year scale, right? So a 9-month or 10-month or 1 year divergence between the hash rate market and the price market, whereas a smaller miner, he's trying to dig in after 3-4 months. After a little while, he can't because his reserves are just exhausted.
And it'll be very interesting to see what happens in June 2020 when the reward halves, based on what we're seeing now. Like I'm really, it's impossible to predict, but I'm really curious as to what is the dynamic going to be then.
Absolutely. And, and by 2020, we're definitely all expecting at least $100,000 a coin. So by then it'll be really interesting to see if that is, enough of a rise to really offset this equilibrium that we have going on. So we'll have to see. I mean, I really think that the price will get there much faster than the hardware gets there for the reasons that Francis outlined, which is that it's just so much more difficult to bring on new hardware versus click a buy button and click a sell button on an exchange. So very interesting stuff, guys. Listen, do you have, Andrew, do you have time for one more topic, or is this going to be good for you?
Yeah, no, I've cleared it. Okay, cleared it.
Awesome, because we usually try to keep it to an hour, but I did have one more topic left that I'd like to go into, so that'll take us over an hour. But oh well. So first, let me just thank everybody so far for joining. We really appreciate it. Hope you guys are learning stuff and liking what we say here. Please, if you guys are new, hit the subscribe button. Otherwise, please hit that thumbs up button. That helps us get into more people's feeds. So we really appreciate that, guys. We try to bring you more and more content on the World Crypto Network each and every week. So really appreciate you guys joining here. We're going to go into our final topic here, which is this. The SEC announced, this is pretty big over the past couple of weeks. The SEC announced that cryptocurrency Ether, ETH, is not a security. So, of course, there's been a lot of coverage of this already. I mean, Tone Vase specifically has a lot of great coverage. He brought in like 9 people in his chat. So I really encourage everybody to check that out. It was a 6-hour marathon with 9 different plus people. So I encourage everybody to check that out. But I just wanted to maybe see if we can get a small little discussion going, get some opinions from our panelists here on what you guys think. So Andrew, what is your opinion on the SEC calling Ethereum a security? Do you think that Ethereum is a security as it is now today? Because obviously the hearing really did kind of carve out the sale versus what Ethereum is today, right? So a lot of people can definitely agree that initially Ethereum was an ICO, was a security, but as it is today, what is your opinions of it today and into the future?
Yeah, so I'd have to give it some thought, but in terms of them ruling that it's not a security, I mean, I think that feels to me like it was the right call, and I wonder, how much of this is really driven by taxes, right? Because I guess if it's not treated as security, it's being treated as a commodity. Is that the correct interpretation? And so again, being in Canada, I'm less familiar with the US tax regulatory environment, but I believe it has an impact for the way that it's traded and with the KYC and that. So from that standpoint, I think it's positive. How ultimately it impacts, Ethereum go forward and ability for it to be sort of, accepted more broadly. I don't know if it's going to be that impactful, but, I'd like to hear what the other guys have to say.
Yeah, for sure. Because, it does feel like, obviously, if they would have declared it a security right now, they would have completely wiped out and destroyed a huge part of Ethereum and a huge part of cryptocurrency, because there is so many companies now actually backing Ethereum, Microsoft and all these other big companies with their consortium, their Ethereum consortium and things like that. So it would have been pretty devastating. But of course, as many people think, including myself, I think that was a necessary thing to do. I think that was a necessary thing to get rid of and just burn off all this overgrowth, unnecessary overgrowth, so that some new stuff can really, some more important stuff can really be churned out. Because as we're looking at it right now, with the Ethereum statistics and stuff of the top 10 DApps, they're all like just a couple hundred users a day. And we realize, of course, that it's early. And I try to say that all the time on the show, that it is early days. But at the same time, after 2 years and just, hundreds and hundreds of millions of dollars, if not billions of dollars raised via ICOs and Ethereum itself, it's just really interesting to see that not a single DApp has a couple hundred views a day. So let's ask John his opinion on this. John, what do you think about this ruling? Do you think this was correct? And how do you think this will affect Ethereum in the future?
At first, I was kind of pissed when I heard the ruling, and it wasn't because of the technical aspect of what they said. It was because, from a technical and a practical standpoint, I'm okay with saying that oranges in the Howey test aren't securities. And I'm not sure if you're familiar with the Howey test, but basically, the security aspect was how they offered the tokens. It wasn't necessarily what the tokens are in function. Just because you have oranges be part of a security offering doesn't make an orange now a security. So I'm okay with Ether being the actual tokens not being called a security. What I'm not okay with is that that there's still no action on the other end. I don't want to come here and say that I think the SEC should go hunting everybody down to protect Bitcoin virtues because ICOs are scams. But I do think it does chill the business side of blockchain and Bitcoin, because, for example, this is what I said when I heard it. I said, as a company, we consciously made a decision to not do an ICO because we feel like they're sort of like a pseudo security where the people that buy them kind of get a security via sentiment. They don't get to have any equity, they don't get to have any dividends, but they still have to rely on the success of individual actors for their security or for what they've bought to increase in value. Most people aren't buying utility tokens for their utility. They're buying them to speculate. I would say it's probably 99% of people. Nobody's buying these tokens because they can't wait to use this network that's coming out. They want to sell to people for a higher price.
And we see the proof of this in the activity of the DApps on Ethereum.
Sure, and the first thing there's evidence everywhere. The first thing you hear when somebody hears about a new ICO is when exchange. They want to know when it's going to get listed because they don't care when protocol, they care when exchange. And this is natural. It's not crazy. This is what makes these things securities. But I don't like that, because I was trying to be safe and I didn't want to worry about having to deal with regulators and the SEC for offering some token. Really, I would have liked to be able to do an ICO that actually gave people, dividends or equity. But even that is something you don't see. We saw maybe 1 or 2 companies do this, and then they went dark after they did it because they realized what they exposed themselves to. So I don't care what the SEC has to say about Ether tokens being security. I care what they have to say about companies offering ICOs and offering pseudo securities and the types of behavior they are allowing, and how that's letting money go to scammers or people that are breaking the law. They're letting all this money flow in that direction, and yet the people that are obeying the law are the people that are actually paying the price. So this is what bothers me about this decision.
Yeah, it's a bit of a shame that companies that went the legitimate route, who feared the SEC coming down on ICOs, because they let's face it, they really are mostly securities, as the chairman of the SEC even said. But it's just a shame that these companies that could have ICO'd and made more money than they did going the traditional VC route didn't. They all kind of got punished. When this ruling came out, the SEC kind of said, "Oh well, sorry, we're gonna okay these guys. Even though they did an illegal security offering, we're going to give them a pass." And that is, in my opinion, really, really unfortunate.
Yeah, I really actually think I think that offering an ICO is actually worse than offering a security, because you don't even give the people equity, you don't give them any actual direct exposure to the success of that company that they're giving money to. It's like, if issuing a security is heavily regulated and you did that on crypto and you broke some laws, the SEC would definitely come after you. If you actually offered equity and you actually offered dividends, they'd be calling you as soon as they found out. But because they didn't, because they offered something even worse, somehow they're getting away with it, and that's frustrating.
Yes, indeed. Let's see what Francis's thoughts are. Well, before we go to Francis, sorry, Andrew, do you want to comment yet on anything, or do you want to get Francis go?
No, you can go with Francis. I thought that was well said. So
cool. All right, Francis, go ahead. Give us your thoughts.
Yeah. So first thing is that the Canadian Securities Administrators, which is the coordinating body of the provincial securities regulators, did actually come with an interpretation guidance for which tokens are securities a few days before the SEC chairman made his comment, and they're quite different. So I'll just address the SEC first. Like John, I was a little bit upset when I looked at all of the details, the justification, and I'm actually happy for a lot of the Ether people, because a lot of the people in Ethereum that I know personally, some that I know were totally about the money and about making a lot of money, but a lot of the people that I know are like kind of Bitcoiners as well. You know what I mean? They had the ideology, they had the decentralization ethos, and they're not scammers. So I am happy that a lot of my friends in Ethereum are going to get a pass. But what worries me the most is the arbitrary nature of the interpretation and the kind of moral hazards that it may create. So, for example, when you look at the SEC's interpretation, what they say is that they interpret Ethereum to be decentralized enough so that today the value of your investment doesn't people don't rely on third parties to secure the value of their investments. And they don't have a lot of criteria to determine or guidelines to determine how are they making this claim. When I look at, for example, some of the Ethereum Foundation people making phone calls to exchanges to stop trading or such behavior, I'm thinking, oh, well, is that not sign of reliance on a third party? Anyway, I find that distinction to be unclear. And what's important about it is that it does create an advantage for Ethereum, which the others cannot have, which is essentially the reality of this is if you can stay low profile for long enough after your centralized issuance to inevitably become decentralized enough to resist just the practical reality of securities laws enforcement, you get grandfathered, right? So Ethereum has something that the other coins could never ever reproduce, which is censorship resistance to the SEC. So I think this kind of enshrined Ethereum as giving Ethereum a early mover advantage I didn't have before, which is simply the fact that in the future, it will be impossible to create an Ethereum clone, which is not a security, because as soon as you issue it, the SEC will be on you. Ethereum had a 4 or 3 year grace period. So that's what bothers me the most, is that it creates winners and losers in the market. Otherwise, okay, I don't really have an opinion otherwise than that on the US. In Canada, however, we got something much different. We got a guidance by the CSA, as I mentioned, which is really technical interpretation of what makes a token a security. And particularly, they go after the notion of an investment contract, more specifically, and they have 14 indicators that your token may be an investment contract. Each of the indicator has examples and interpretations for a part of the indicator, which is very, very precise. And the main focus here is on the existence of an issuer right? The existence of an issuer and the fact that people rely on the third party as well. So for example, if, and I went through it on Twitter, but I'll just show you some of the, and the kind of TLDR is that according to me, in Canada, they cannot say that Ethereum is not a security. They would be creating way too many exceptions in their own guidance. If they did say that Ethereum is not a security, according to me, they would have to say that it is because they cannot enforce it or because of other reasons. So what I feel like the SEC did is they retroactively created some kind of vague, ambiguous criteria to not say we can't go after Ethereum because it doesn't make sense. A lot of business is based on Ethereum. It's too decentralized. We would have to be very authoritative on this. We would ruffle a lot of feathers. We just don't want to go after Ethereum. It's just not worth it. But instead of just saying that, I feel like they retroactively justify themselves with ambiguous criteria. So just to list a few very tiny, if I can just have the time to find it. So basically, if you look at the criteria, if, for example, a token is issued and the platform is not immediately available, if the token is, that's one criteria, it's a security. If the token is issued with the promise of using the money to build a platform, it's a security. If people are buying the token at a point where it's not usable, it's not a utility token. And Canada also in the CSA clearly stated that utility has no bearing on anything whatsoever. If your thing is useful or not, it has absolutely no bearing. It's all about how it was issued and how it was offered to the public. So, for example, they also talk about, the SAFTs, whatever. If you have, they specifically say if you have like 3 layers of issuing, and at a certain point, there's a securities-like token. It doesn't matter what kind of scheme you're using. If at any point of it, it results in the creation of something which is an investment contract, the entire process is a security. So it will be interesting to see because
you pretty much named, like, you pretty much just described basically the top 20 tokens that aren't proof of work pretty much, but go ahead.
Yeah, and for sure, according to me, there was an investment contract between the issuers of Ethereum and the buyers of Ethereum. So will the CSA go with the SEC route, which is basically something can be a security and not become a security? That's one question. We don't know. Are they going to have this? This is a new introduction to securities regulations. The concept of securities that expire and don't become securities. That's really ambiguous and vague and new, which is interesting. So is Canada going to go that route? I don't know. And if they do go after that route, what's the implication? Because what I was thinking is if the SEC says, well, it may have been a security before, but it's not a security now, the message could be, well, if you're a trader and you're a financial institution and you're trading Ethereum or offering Ethereum trading, then you don't have to register as a securities dealer. But if you were one of the issuers at the time that it was a security, then you should have registered as a securities issuer and you didn't. So you're not, pardoned. Only the people now that have started to manipulate this thing after it was not a security, after it became decentralized, they're off the hook. So they're going to have to, I guess, find a cutoff time. I don't know when it became decentralized enough to not be a security, which is really strange. You know what I mean? It's kind of like when did like man become man and not, an ape or something like that.
It makes no sense. It makes no sense. We have no precedent of how a security, became not a security over a certain amount of time. We have no precedent of it.
When the SEC called the Ethereum tokens not a security, when they called them decentralized, I don't think they were referring to how decentralized the hash rate was or how decentralized the code, the programming team is, or even how decentralized the people that issued it are. I think they were talking about their ability to enforce the tokens as securities. They were basically saying, look, if we look at this practically, they were coming from looking at it backwards. They didn't start at the beginning, they started at the end. They said, okay, if we call these tokens securities, what is our ability to enforce that? Are we going to be able to make every exchange that has Ethereum listed register properly with us? And are we going to be able to even remotely enforce that? Are we going to make everybody that has traded this now go back and redo their taxes properly as if these things were secure? It was just unfathomable amount of work, especially for the size of their organization, and how it would actually affect what their charge, and their charge as an organization is to protect consumers. Their charge is not to go around, policing everybody. It's to protect consumers. So in the end, they couldn't even confidently understand if they were even helping American consumers by calling it a security.
Yeah, that's a great point. I just want to point that out one more time before we go to you, Andrew, and get your thoughts. But that was just a great point where they're saying that it's decentralized, not at a technical level. Right, because we understand that the nodes, I mean, oh my gosh, not even close. You can't even sync Ethereum. By the end of the year, all nodes will be in a data center. I mean, it'll literally be like working on AWS. So they clearly weren't talking about the technology. Again, they were just, I think, like John said, talking about their ability to enforce it. Because how would they enforce it at this point? Because we have every major company pretty much on board the Ethereum train at this point. But go ahead, Andrew. Let's see. What are your thoughts on the discussion so far?
Yeah, I mean, I think it's interesting. The part that resonates with me is just that the differences between what was pointed out between what the Canadian regulatory area thinks and the U.S. And what that ends up happening is, I remember back when I was on the finance side, and we would talk to different companies about doing ICOs, and some of them would be like, "No, we're not allowed to sell," even though it might be a Canadian domiciled company originated in Canada, but they're not allowed to actually sell to Canadians. And then you get these other rules. We're not sure if they're allowed to sell them in the U.S. So I just think it'd be good to get some clarity, and if there's some uniformity amongst the regulators to create some type of a transparency as to how do you do an ICO, where do you sell it, how does it get classified, like what countries are you like, how do you go about it without breaking rules? And I think that transparency is still lacking.
And that becomes tough because they don't want to necessarily, all of the SEC's laws are very open in general for a reason, right? They don't want to necessarily just make all these laws because they would have to enforce it. They mostly want to kind of make guidelines that that the market then can kind of make up specific rules for. But so we want to be careful about how exact we want the SEC to actually give us, how much clarity we actually want them to give us. But at the same time, yeah, as you say, Andrew, at this point, we're just completely in the dark still.
But sometimes, when you go to the websites and you see the ICO, the pre-sales and everything, it'll just say, not available to Canadian or US residents, right? Like, are people still going to find a way to, when you think about where a lot of it's held and where a lot of the whales are, there's still plenty of them outside Canada and the United States. So, it's just the impact. But to me, it's just a shame if you have a Canadian company with a great idea and does not have an ability to raise any capital through an ICO in Canada in its own backyard.
Some ICOs even use that as a facet for scamming differently. What they do is they accept people buying, and then they do the KYC later, and then people are scared to give their KYC and make the claim on their tokens. So there's a bunch of tokens that just go dark, and this is to keep the money.
That's metronome. Is that what you're referring to, John?
No, there was something else more recent. I didn't know that about metronome. The thing I don't like about metronome is I
exactly
really
like you described it.
Yeah,
they expire, and after some point, you need to register KYC to claim your.
Yes, and you have to move them as well, right? Like you have to move.
You have to move them in a really privacy unfriendly way on the Bitcoin blockchain. Essentially,
I'm pretty sure metronome is designed to help people like Chainalysis learn more about the original chain. It's like they want people, because they're doing it as a fork, right? They're using So they're going to fork Bitcoin. They're going to get everybody who moves their metronome to be able to learn information about, map that onto the Bitcoin network, and then they're going to get KYC, and they're just going to have more mapping for Chainalysis and people like this.
And this makes sense because this is what Jeff Garzick's business is, right? Is chain analysis. So this makes sense that you want to do this. And remember, he also this is also a ploy to take Satoshi's coins as well, right? Because if you don't register the tokens, then they automatically get sent back. So since Satoshi can't register, he'll automatically get all of Satoshi's coins.
Yeah, it's like it's like a time reverse pre-mine.
Yeah, but on just one last topic for I think the SEC and the CSA, they just killed the utility tokens, because I conceive the utility tokens, and when I talk about the utility tokens, I'm talking about all the scams that we're seeing, all the tokens that make no sense, that are not tied to any equity right, profit share agreement, or whatsoever. What John accurately described as being emotional or sentimental securities. So I see that as being the end of those, because they were all a scheme to avoid securities regulation. The only reason why, the token was useful to be able, like they made the token useful in the app, like the Braze browser. Like the only reason why you need the Brave browser token to do things in the Brave browser was, in my opinion, to create this avoidance of securities regulation, and also to remove their obligation to give some sort of payout to the user, saying, oh, well, the obligation for me to pay you back, to pay you out, I don't have anything. It's just the market's going to decide. So I see that business model as disappearing. And hopefully what replaces the utility tokens, which are securities, but really, really bad securities that nobody would ever buy if they had a choice to buy them, is tokenized, actual tokenized securities, right? So this replacement of the utility app with no counterparty and no prospect for return is going to get replaced, hopefully, by tokenized securities as the competitive advantage of going outside securities rules falls off. So what you're going to see, for example, what I would love to see, I'm not against ICOs or issuance to the public at all. What I would love to see is a company to say, hey, you know what? I'll create 1,000 shares, and I'll take 0.1% of my exchange's trading volume, and I'll give all 0.1% of my you know what I mean? Like I'll take like a dividend, like 0.1% of my trading volume or 10% of my profits, and I'll just distribute them to the bearer of my token, right? To the bearer of my token. So then there's an actual link between the company's performance and the value of that security on a market. So the fact that the utility tokens are going to leave, I think, might make space, some room for these tokenized securities, which is really the only thing that's worth it, right? Because what you want to do, you don't want to decentralize the business model. You just would want to decentralize the custody of the security. You don't want to change anything in the way the securities work. You just want to have more private, more bearer custody of the securities, and more liquid transfers of that security. So hopefully that's good news, right? So this SEC's enforcement is just gonna remove a lot of the utility tokens. I think we're removing a lot of resources from the market, a lot of energy from the market, a lot of capital from the market that was being wasted, and hopefully that gets reallocated better in the future.
Yeah, because let's be honest. I mean, all those utility tokens, all they were was ways around security regulation. Every single one of them, like 99.9% of them, were all backwards engineered after they already had a product or something like that. To just put a token in there, and it was just 100%. So I'm glad that the utility token hopefully will be dead, because they're just ripe with scams, just designed to be scams. And I hope they do be replaced with security tokens, like you said, tokenized securities, because that will give you all the benefits that we want of the blockchain, like you said, to be able to hold your own bearer asset and things like that. That's really important. So, and people like Bruce Fenton and others are working on this, at T0 and things like that. So we hope that takes off and that the utility token dies, because it was just ripe with mostly scams. But I think we can all here agree on the panel that basically the SEC bailed out Ethereum. I think we can all agree with that. Yeah. So I think we can end the show.
Well, we don't know that they're off the hook yet. I mean, they could still go after them for the issuance.
That's true. That's the original. Yeah.
They never let them off the hook for that. They could still say, hey, everybody that issued these tokens, we still need to have a talk. Are any of you aware of, or were you around for the platform called Just Dice? Maybe Francois, you were, right?
What was that? Was that like Havelock on Havelock, or?
No. Just Dice was basically one of the first. It was the second. We had Satoshi Dice first, which was the first provably fair gambling that we had. But then they had Just Dice, and this was made by a guy named Douglas. And he, what he did was he incorporated profit shares into the system. He didn't do it tokenized because that wasn't a thing yet. But this is what I think we'll see as the next iteration. I don't know that we'll jump right to security tokens. I think we're going to see profit share tokens come next, and you're going to see platforms be able to offer provably, especially gambling platforms. It's already been done, and now it can be done even better if you actually put the tokens on a transparent ledger. So now this guy could do the same idea where he could do a dice gambling website. He could be provably fair for the randomization based off of the block hashes and such. Yeah. And he could also be provably fair for the payout on dividends based on revenue. So now you can see everything on the blockchain, every single transaction for certain types of companies, completely digital companies. And you can see that you're getting paid what you're supposed to when you hold those shares. I don't know that we have tokens that are reliably paying dividends as a function yet, but I'm sure we'll see that.
Yeah,
Very
and
interesting.
you know, it's good to have the trustless audit. So what you're describing is trustless audit of the profit, because we can like users can reverse engineer the payouts and the odds and everything. But you know, trusted audit is also something that's not extremely hard to do as well. So when you're looking at it, you know, if you have a royalty token or a profit share token, if the users trust the name of the auditor, it doesn't have to be, you know, cryptographically auditable or trustless. So I could very well say, for example, an exchange like Bitfinex, which says, you know, normally I charge 0.5% per trade. I'm going to take 0.05% per trade and give that to 1,000 token holders. And, you know, my auditor, KPMG, Deloitte, Grant Thornton, or whatever, is going to provide the audit to show you guys that I did actually issue the amount of Bitcoins that I was supposed to. So, you know, that's just the next step. And people are going to do that. They already do that for traditional IPOs and financial markets. I don't see why they wouldn't do that for the crypto market.
And
With
I
a
think
small
you're
amount of
gonna
trust.
you're going to see a little bit of a conversion between the traditional markets and the ICO market. I mean, I can tell you from a Hut 8 standpoint, one of the things we've contemplated is creating a securities token and selling a piece of equity in the company. And one of the things we've always talked about would be really cool is to use some of our inventory down the road and pay a fiat dividend to our fiat holders and a Bitcoin dividend to token holders. And that would be, I think, a convergence. I don't know of any other company in the world that is, you know, capital markets public in the traditional sense, and also call it trades on the ICO market.
Yeah, I think you can map this conversation also onto nonprofit organizations. If you want to trust a nonprofit organization to report to you that they use certain addresses for certain things within their organization, like this is our payroll address, this is our, you know, advertising budget, this is our legal budget, et cetera, and then you eventually will have people making software to facilitate this. They could actually provide dynamic audits anytime you wanted to look at them, just as long as they always use Bitcoin. You would always have all transactions on the chain, and then if they were a nonprofit, you could actually have like radically transparent nonprofits.
Yep, makes sense. So you guys heard it here, folks. Profit sharing tokens and trustless audits coming to an exchange near you guys. All right. So thanks so much, everybody, for joining us. We really appreciate it. We've been going now over an hour, so I'm going to end it here. I'm going to go ahead and ask my guests where we can find out more information about them. So Andrew, please tell us where we can find you and more information about you.
Sure. You can go to the Hut 8 website, Hut8Mining with the number 8.com. We're also on Twitter, Instagram, and Facebook, all under Hut 8 Mining.
Awesome. John, thanks so much for joining us, man. We had some great conversation as usual. Where can we find out more about you?
Thanks for having me again. I'm on Twitter, Bitcoin Error Log. You can catch me shit posting most days. And you can visit exotica.tv if you want to see some cam girls and help support me there.
There you go, guys. You guys got to follow John. He's got a lot of interesting stuff to say. I will say that for sure. And then, of course, our regular Francis, who's been absent for a little while on vacation. Francis, where can we find you?
I'm on Twitter, obviously, all day, every day. So follow me at @FrancisPouliot_, and please do look for that Twitter verified mark. And if you're Canadian, you know, check out my site, bills.com, BYLLS.com. You can use that to sell your Bitcoins or pay your bills with Bitcoin.
Absolutely. And of course, you can find Francis and myself at the Bitcoin Rodeo Conference, July 8th in Calgary, Canada. So thanks again, guys, so much for joining us. You can find, of course, more information about me on my Twitter handle at @TheOneVortex or theonevortex.com, all spelled out. We really appreciate everybody joining us here. We had over 400 people joining us live, and we had a bunch of people in the in the chat. And we hope that if you missed a show, will join us in the comments. So please, guys, give us a thumbs up and subscribe if you are new to the channel. So we will be back here. It's probably not. Yeah, I'm actually going to be here back next Sunday, I believe. It's the Sunday after that I will not be here because I will be in Canada, as I just mentioned. So thanks again, guys, so much for joining us. We will, of course, be back to talk Bitcoin as we do every Sunday right here on the World Crypto Network. So until next time, keep talking Bitcoin. We'll talk to you guys later.
Thank you.